Day trading is becoming ever more popular lately. This is likely due to prominent wins on places like Wall Street bets. But then again, there's also been a lot more losses. In this video, I'm going to talk with a finance professor who is going to reveal some of his largest losses in day trading. We'll also talk about what makes a successful day trader and what you can learn from the losses. If that sounds interesting, make sure to successfully click that like button so that the YouTube algorithm can learn from your support. While you're down there, please also subscribe and ring the bell if you would like to be notified when new videos come out every Friday. They'll help you live the life you love through personal finance, investing, and self-improvement. Hi, I'm Evan, and let's talk with Dr. Safdar. Hey, Dr. Safdar, thank you so much for joining me. Pleasure to have you on as the first guest for Add Some Music. And if you don't mind telling the folks back at home who you are and what is the definition of day trading.
Hi, Evan. Thank you for having me join this talk. I am actually a professor in accounting, and I have a significant finance background as well. I teach at Widener University, both finance and accounting classes, and I have a substantial statistics background as well. And, markets are something that I study, as a profession, I guess, and trading is an activity that I've been undertaking for the last 2 years. And it's become, something of great interest to me.
All right. And specifically, what is day trading? How might that be a bit different than traditional investing people think about?
Okay, that's a great question. So there's actually a significant difference, okay? When we talk about investing, right, investing is typically based on a long-term horizon, that you're interested in buying a business, for example, if you know Warren Buffett, right, in Warren Buffett style, if you want to buy a business and then hold on to that business, because that's what buying stocks is, right? When you buy the stock of a company, you own a share of that company. So you hold it for over the long period unless something significant changes. Whereas day trading, your positions last. You can be in and out within seconds, actually, or it can go on for several days. So either way, day trading is very, very short horizon. Typically, that's how you would differentiate it.
Right. And I think we could both agree day trading has probably become a lot more popular over the past couple of years. There's been an expansion of retail traders getting into investing, and it's been more accessible than ever through different phone apps, right? Robinhood being the very popular one. You may have seen different news articles over the past year with particularly people from Wall Street bets having very large losses within this day trading space. Now, even as a professional, have you experienced any losses in day trading?
So I would not call myself a professional. Because becoming a professional in anything requires years and years. Even though I have significant training in finance, I was always taught to think about investing, not so much trading.
Mm-hmm.
So it's been a couple of years since I've been doing it. And primarily I got started in it like anybody else. When we had COVID, we were spending a lot of time at home, so it needed interesting activities.
Mm-hmm.
And, that's how I got started. I have had significant losses. In fact, I can tell you that the majority of days that I have traded, I actually come out ahead.
Mm-hmm.
All right. I make money on a majority of days that I trade, but a substantial portion of those profits have been wiped out in big losses in just 3 days over the last 2 years. So it is a very, very dangerous activity when you're doing it with real money.
Of course. Now, could you provide us with an example of one of these losses and maybe start with why you thought it would be a good investment? Yeah, a good opportunity to have a quick flip.
Okay, so in day trading, you're generally looking for to take advantage of price movements, right? So if you think the price is going to move up, even momentarily, right, you will take what we call a long position. You'll buy a share, right? Mm-hmm. And then you hope the price goes up, and then you will sell it, in the very, very near term. And you can also make money by betting on a stock going down as well, which we refer to as shorting. And folks who are interested, you can study the mechanics, but shorting is now very, very easy to do for most liquid stocks at this point. So I think you asked me about a major loss. Is that what you asked me?
Right. And why it seemed like a
so my worst trade was losing 1/3 of my account within a matter of minutes.
Wow.
And it's not that I didn't understand how to execute the trade. It's not that I didn't understand what to do, but a huge component of day trading is psychology, because you have to make very quick decisions under extreme uncertainty. Mm-hmm. And the most difficult part is being able to take yourself out of, at least in my experience, being able to take yourself out of a trade that's going bad.
Right, right.
As human beings, we don't like losing. Okay, we don't want to admit that the idea that we just undertook was not a good idea. But by definition in day trading, right, it is a game of chance, and there you have to accept a certain percentage of times you're just going to lose. The mistake I made, I was trading Tesla. Okay, it had very strong momentum. It was, near its all-time highs, and it just refused to come down. It was very stubborn. It just refused to come down. It's like people couldn't get enough Tesla. So I bought it at a point where I thought the price had dropped to a certain point and it would start going up again. Okay.
Right.
It just happened that at that very moment, I think a lot of institutional traders had decided that the stock had gone up enough and they started dumping it. Okay. I didn't see that in the moment. And what I did was, when my trade started losing, what I normally would do is to just stop it because the idea has failed. I added to it. So I try to average myself down to get myself out of the loss. And before I knew it, in a matter of minutes, the stock price had dropped $150, just like that. Okay, massive volatility in that stock. And I was out, my 1/3 of my account blew up there that day. Okay. Part of the reason that I lost so much was because I was trading with margin. Margin creates great risk. Margin essentially is that the brokerage house gives you money, lends you money, you use their money along with your own. After that loss, one of the things that I immediately did as a risk management tool or risk management rule was that I eliminated my margin account.
Right. Well, I take it that was probably large enough to trigger the margin call, right?
Well, it didn't trigger a margin call because, I relative to the account size, it wasn't, I think, big enough. Okay. I still had, 2/3 of my account. Margin call would typically occur if when you're very close to wiping out your account. And at that point, the brokerage house, their money is at risk, right? Their money wasn't really at risk there yet. Anyway, so, and it was a matter of minutes, and it was a several $1,000 loss for me. And it was devastating. It is very hard. Afterwards, I knew exactly what I had done wrong, but the psychology, the way it works is you kind of get stunned by it, and then you try to extricate yourself out of it because you don't want to take the loss. And that is the big reason, in my opinion, folks not ending failing trades, but adding to failing trades. In my opinion, that's the number one reason that 90% of day traders fail.
Right. And that's an interesting point, because going back to the idea of day trading becoming popular and these Wall Street bet types, we've seen the big meme recently is diamond hands, right? People who just consistently hold no matter what. And obviously Tesla has gone up and down probably quite a bit since this incident. So ultimately, what was the conclusion? Did you choose to just hold Tesla for a while and hope it eventually rebounded, or did you sell for the loss?
Well, no, because it could have, you really don't know how far it could have gone down, right? So, it was trading at, I think, somewhere around $1,200 a share, or $1,250, and within minutes it was at $10.50. So there's no way for me to know this is not going to go down another 150, right? It goes another 300, boom, my entire account is gone, right? Right. So no, the right thing to do would have been that the point at where I had already decided, before I even took the trade, I knew that at this point the idea has failed, right? That this is not doing what I expected it to. It's not bouncing, right? At that point, the right thing to do was to exit, get out, accept the loss.
Right. And so in those kind of cases, do you have stop losses set up, or is that just a mental note you take and say, around this point, I'm out?
Now I have stop losses set up.
Okay.
At that point, I had a mental note, but I was not able to execute it.
Okay,
understandable. I did not want to lose on that trade.
Yeah. I think we all understand that one. Now, as you were trying to say earlier, 10% of day traders can be successful, and you have seen some success as well. You've mentioned most days you come out ahead.
Let me interrupt you for just one moment, Evan. I want to make a correction to that statement, because that's a common statement in the industry, right? That 90% fail, 10% succeed. Okay. I think 100% of the people who do it correctly succeed. So that's, if we learn to do it correctly, I know people who are doing it correctly and they do very well.
Okay.
And so, sorry, not that your statement was wrong. We want to understand that if you want to succeed at it, you can, but you've got to do it correctly. You've got to manage risk.
Just like anything in life.
Absolutely.
But if people are able to find success in day trading, as you've mentioned you have, could you, as a counterexample, provide us an instance in which you have done well with day trading?
I'm going to give you an example that's going to be very counterintuitive. Okay. I'm going to share a platform that I use. This is called TradingView. So what you're seeing here is Snapchat. Okay. I was trading this morning. So Snapchat, it opened down here around 38.49. Now recently they had very good earnings reported. So the stock has been doing quite well. So at this point, right, the stock bounced and it started going up. And my theory was that, see where it broke down here around this level earlier?
Yep.
Okay. My theory was that when it gets here, it will get rejected again. Okay. And it will come down. So I shorted the stock here. Now, shorting means that if this stock price comes down, I make money.
Right.
Now, what happened? You can see that it did not, it did not turn around, right? Instead, it broke right through and kept going up. I stopped right around here. I stopped the trade because at that point, when it started to base here and then started going up again, it was clear that this was not going to come down. And that was a stop with a loss. And that trade is exactly, I would do that trade again because that's a successful trade. The reason this is counterintuitive is that I didn't make money on this trade. I lost money.
But you prevented yourself from having a large loss.
Not only that, on average, right, in a setup like this, on average, we expect this to come down. If I did a similar setup, right, if I see a similar situation 10 times, let's say, 7 out of those 10 times, this would have come down and made me money.
Right.
3 out of 10 times, it won't. And this was one of those 3 times. When I encounter that, then the execution requires, risk management requires that I exit the trade when it's no longer valid. So at this point, the trade had failed, okay? So I didn't add to it again this time, right? I didn't insist that I want my money back, right? I would have lost a lot more, as you can see.
Okay.
This is a successful trade. And the people who are good at this understand that.
Right.
They understand that you're going to lose 3 out of 10 times or 4 out of 10 times, okay? But the magic bullet that you have here is your ability that you don't have to continue a losing trade, but you can allow a winning trade to continue.
Yeah.
Human psychology makes most people do the opposite.
And that's quite a bit of finance. It's not necessarily about past performance, but people's expectations about future performance. And so you're not just predicting companies, you're predicting how people will react.
That's exactly right. You're predicting, in a sense, you're predicting, right, whether people are going to continue to want to buy, what the expectations are, or they're going to continue to buy to sell. Continue to sell or start selling, right? And those are unknown, right? We don't know for sure what's going to happen, right? So we are going by here, the stock rejected, right, and came down. So the expectation was that it should reject again, and probably 70% of the time it would, okay? But in this case, it did not. So once you realize that the trade has failed, you have to get out.
Now, I'd like to speak about this on the opposite side from my perspective, because I dabbled partially with day trading back in the day. And this is years ago. This is probably back when I was taking intro to accounting with you, managerial. I was on Robinhood and I liked the look of this mining company. The ticker symbol was JAGX, I believe. And they had their earnings call the next day. I liked it, bought some. And then, I checked in during the call. It's going up, it's going up, it's going up. And I didn't know where the top was. So I decided not to sell and I held. And then of course, afterwards, people just dumped, price goes down, I'm out, my money. It's like, So sometimes you have to understand where to sell as well. You gotta figure out where the top that you're okay to sell is at.
That is correct. And that thing only comes with experience. Okay. This skill, like anything else, right, that is meaningful, is going to require a lot of training. Okay? And in the process, you're going to lose a lot as well. That's just part of the education. And there you did very well, right? But you didn't know how to decide when to leave the table.
Right.
Right. You didn't have a rule, right, ahead of time on when I'm going to leave the table. Of course, now you've had that experience. Next time you have to think about, I'm winning, when do I get out?
Right. Well, since then, I've also made a change to my general strategy, because now I've been following a more traditional finance path where I'm working on, of course, maxing out the tax advantaged accounts, long-term holding the broad market index funds. People who watch my videos are aware we talk about this all the time. But just to try to draw a couple more tips for the folks back at home. What are some of the different things that we can learn from day trading that people might be able to apply outside of that form of investing?
So one of the things, most important things you learn about from doing day trading, I think, is you learn a lot about yourself. You learn a lot about how you're going to react under extreme stress. When you're significantly down on a trade, it's not just money you're losing, right? It is also your self-esteem or confidence that you got this wrong. Okay. And the ability to accept that this is a game of risk. And that by definition implies that there are going to be losses. Okay. I just showed you a trade where I lost. To me, that's an excellent loss. I have to accept that I'm going to lose 3 out of 10 times. So decision making under uncertainty, in the larger picture is something, and how we react under that kind of stress. I learned a lot about that, about myself. Initially, I reacted very poorly to when I used to lose. Okay. Yeah. Now I accept it as part of the business. It's just how
just hope it averages out.
Yeah. Well, if you're doing it, like I said, if you're doing it correctly, you're winning 70% of the time, or win 60% of the time, right? You're going to come out ahead as long as you stop your failing trades. Right. Don't allow it to continue. So you learn a lot about that. One of the other things that I've learned a lot, because I've been doing it over 2 years, is that market behaves in very unexpected ways.
Right.
You will see things go, for example, so let's look at the S&P index, right? So this is the S&P 500 index level. And here it is since, we can go all the way back, and as, people would agree, right, that this just is going up and up and up, right? As you can see. But what's interesting about it is that, most recently, it has taken an enormously, a very quick path up, okay? And every time it was, it had gone, here's the pandemic, this is where it was in the pandemic, and just jumped right back. And there are various macroeconomic reasons for why it jumped back so quickly and what started going up. I mean, it's just almost going up nonstop. If we went to the monthly level, you would see this thing is just almost parabolic, right? Rapidly it's increasing, and it's much faster than the way it used to be in the past. So this is one of the things that I learned about the market. When it is in a momentum phase, it is very resilient. It does not want to break down. Okay? And there are some people who argue that this is a massive bubble in stock prices and asset prices at the moment. In general, most people at the moment, I probably disagree with that, my guess is, and some people, believe that. So you learn a lot about how people view the stock market and how they respond to how prices are moving. So prices have just been going up, right? And now you're seeing a little bit of pullback because of what the Fed is doing, most likely. So you learn a lot about the market itself, which is very, very interesting, I think, as well.
All right. Thank you very much. Really appreciate it. With that, make sure to like this video if you enjoyed Dr. Safdar's honesty or if you learned anything interesting. Do you day trade? Are you going to stick to safer forms of long-term investing? Let me know. Comment down below. Then click that video on screen to watch another that you're going to enjoy. And then please add some music, some day trading wins, or whatever else it is that you love to your day.